What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Friday, February 16th. Well, the S&P today, really SPY today, there is a little bit of variation between the two. Yesterday we saw the S&P closing just barely above 5,000. SPY lagging behind just slightly. Today, though, reclaiming $500 a share, which is exactly what the bulls have been looking for. Let's take a closer look. Hey, listen, if you guys get value out of these videos, I'm covering SPY along with a number of other tickers every single day. Please subscribe to the channel. Our goal is 1,000 subs, and I think we can get there very quickly with your guys' help. So I appreciate it. Let's take a look. Well, starting here on the 1 minute chart, the market itself was semi in play today. Remember, listen, we're going to take a look at SPY. The majority of this video will be bigger picture, but I always like to start by looking at intraday opportunity just briefly because it can help us generate revenue around core positions, right? Even if someone isn't primarily a scalper, I always say if you have the time, it doesn't hurt to try to generate some revenue as long as your strategy, as long as you have edge, and as long as your risk management is absolutely in check. But in order to have that edge, and this is something a lot of people don't realize, I think this is one of the biggest mistakes I see. People don't trade tickers with edge. Listen, if you take the best traders on the planet, and I'm speaking very literally, okay, I'm not exaggerating. If you take the best traders on the planet and you tell them, okay, 250 trading days a year, you can only trade Apple. Listen, almost all of them are just going to get chopped up. Does Apple have edge some days? Is it in play some days? Yeah. Is the market in play some days, not on others? Of course. But ticker selection is so incredibly important. The S&P today, of course, SPY in particular, in play, trading around that huge technical level that everyone would agree on, right around $500 a share. Now, a setup that I thought was particularly interesting was kind of this earlier morning setup. The channel, it did tighten down a little too far for me to be comfortable taking this with edge, but for a scalper who's trading this with a tighter ratio, this little rejection setup offered, it wasn't perfectly clean, but there's edge in these little scalps off of that volume weighted average price band. Really, it's the 2 standard deviation band from volume weighted average price. It is, the rejection and bounce setup, in particular, the way that I trade it is a strategy direct from my playbook. I'm not claiming to be the only one who trades that. However, I did develop this in my own style, and it's one of my backbone setups. Here, channel just a little too tight. When I say channel, I'm talking between that volume weighted average price resistance, that red line, and that 20 EMA, which is purple, right? If I'm going to take risk, I need potential reward without as little hang up as possible, or as little potential hang up on the way to that reward as possible. Okay, keeping that R ratio positive. But some interesting potential here on SPY to potentially generate some revenue around a core market position here intraday. Now, let's go more bigger picture. Take a look at the 5 minute chart and look for any volume bias in the market today on obvious moves. So we look here, we had like this big midday pump, kind of out of the blue, right? Not a time you'd expect to see a whole heck of a lot of volume. We saw a little bit of an increase in volume, but look here, what we really saw, and this is relatively common, we saw that bigger pump into the close on increasing volume. Now look, when you see volume that outweighs like that, understand that every once in a while, it could be a data error, okay? What a lot of people don't realize is that there's almost a monopoly on Wall Street data. There are a couple firms, and if you really look into buying data, first of all, it's very expensive. Okay, it's not cheap at all, but it doesn't matter because all the companies are going to pay up anyway because they need the data. There are a couple of companies that provide data that everybody buys from. So what's interesting is if you see data errors on like one broker and then you check 2 other brokers and it's there as well, a lot of people are like, oh, that must be real, when in reality it just got spread from the same source, even though it is an error. I'm not saying that this is necessarily an error, okay? It's just important to keep that in mind. But that last candle of the day, it's not uncommon to see elevated volume at all here. And if you're a bull, ideally when you see elevated volume like this on a number of candles on green candles, that's not a bad thing to see. Bears, you would prefer to see that kind of volume on red candles. Okay. Now let's get super contextual by taking a look at the self-fulfilling prophecy areas on the 30-minute chart is what we'll start with here. So listen, here's what I'm looking at if I'm a bull here. Currently we find ourselves, we are approximately 0.43% away from a test of that 50 period. Listen, if I'm a bull, look, upon a test of that, that's pretty much a test of $500 a share. Gonna want to see that bounce as hard as possible. Okay, and really simple, if you're a bear, break down through there. That might get you close to a downside test of 500, which brings us to our next time frame, the 4-hour chart. You can see here that the 50 period on the 4-hour chart is also in play. That is below $500 a share, currently approximately minus 0.85% away from a test of that 50 period here on the 4-hour chart. If you're a bull, bulls ideally, you wouldn't want to see a retest of that because that would be a crack to the downside of $500 a share, which is a huge psychological level. But if we were to see a retest, obviously a hold, bounce back up above $500 a share. If you're a bear, ideally, you'd love to see a downside break of that 50 period because that would also mean a downside break of 500, and that puts you in a great position to discourage a lot of bulls. All right, let's move on to arguably the most important chart, which is going to be the daily here on SPY. Everybody in the world is watching this chart with the 50-day and the 200-day, both of which are not really immediately relevant because we've had such a pump that they're catching up still. So that means that here on the daily, things get really simple, really quick. If I'm a bull, one thing is on my mind. Well, really two things. Hold 500, just hold above $500 a share, and ideally break into a new all-time high over 503.50. Ideally, closing at an all-time high would be wonderful as well, or near one. Okay. Now, if you're a bear, it gets really simple. Reject that all-time high, and really, you have your eyes set on a downside break through $500 a share. Okay. The S&P is really, really simple right now. Looking at the chart, when you're trading around huge psychological levels, all eyes are on that. But let's take a look here at the bias. Let's see what the options traders are thinking. Kind of like an over-under mentality here. What are we looking at? 8.5 million contracts traded, good sample size, slight put bias here today, at least overall. Just under 4 million calls and 4.56 million total puts. That short-term speculation, 1.13 million calls, 2.23 million puts. So the short-term speculators are betting against $500 a share here. And then, as expected, the mid to longer-term speculators, that those at the money, in the money, and deep in the money contracts, all leaning rather heavily to the bullish side. As always, listen, stay in the game, manage your risk. The options traders can be wrong. Again, hey, if you got value out of this video, please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.